Welcome once more to Finance Magnates Executive Interviews. Thank you so much for joining us today. We're on day 2 of the iFX EXPO in Cyprus, and I am joined by a new player in the market, which makes me very excited. We always like to have fresh blood in the industry. Jason Keogh, he's Sales Director at Fusion Capital. Jason, thank you so much for joining me today.
Thank you for inviting me.
How's the expo going so far?
It's
what
fantastic.
Do you think?
Yes, beautiful venue, lots of different types of clients and stands. It's our second day here and enjoying it very much.
I mean, you've been in the industry for quite a long time yourself personally.
Yes.
The brand is pretty new.
Yes.
Can you tell us a little bit about yourself, your role, the brand?
Yep, so 31 years in the industry.
That's you, not the brand.
That's me, absolutely. Feels like a lifetime.
Yeah.
It probably is a lifetime.
For some people it is.
Yes, absolutely. So I spent 25 years of that in traditional finance, so fixed income, equities, futures, pretty much the whole asset curve. Worked for banks, brokerage houses, and then in the last 5 years moved into the digital asset space, working for digital asset platforms, trading platforms, and finally ended up at Fusion Capital, and I've been here now as sales director for a year and a half.
Mm-hmm. Tell us a bit more about Fusion Capital, because one of the interesting things always is to see new brands come out. You know, what kind of trends do you see in terms of like the regulations that you guys are obtaining, the markets that you're operating into, the demand that you see, the services that you're providing? Where do you see a need?
So Fusion Capital is fundamentally a tech company that has created consolidated liquidity only in the crypto space. So we combine spots, CFDs, futures, perps, and soon ETFs into our offering. We take internal liquidity, external liquidity from market makers and exchanges, and pipe that into one consolidated feed to give clients the ability to, via API, trade over 350 crypto pairs, which I believe is the largest out there. The reason why we came into the market was we have a mix of very crypto people within the company and then more TradFi people like myself. And we felt that there was a gap in the market. For example, pricing. Institutional clients were paying, we believe, too high a price for the privilege of trading crypto. So we came in and kind of disrupted the marketplace and said, well, actually, if you're a broker or an asset manager, why should you be paying 3 or 4 times the price if you're trading equities? So we brought that price structure down, and what we also did was customize liquidity, because no one client wants the same liquidity. So what we did was we basically, when we onboard the broker or the client, we say to them, what exactly do you need from the liquidity? And they basically tell us, and we then structure that in a format that, whether it be market depth, latency, the number of pairs, it could be a multitude of different things. And we then package that individually to that particular client. And then the other thing that we do is we say, how do you want to pay for that service? So we offer either commission only, we offer spread only, we also offer a commission and spread combination. And then on the financing side, because there's no standardization in financing for crypto CFDs, what we've done is we've taken all the financing mechanisms from other places, we've put that again into one consolidated financing price. And what we allow clients to do is finance either hourly, 8 hourly, or end of day. So it's very customizable, and that's where we've done exceptionally well. Over the last 3 to 6 months, we've seen a huge uptake in primarily brokerage houses in Cyprus, Dubai, but also in the United Kingdom. But just as a caveat to that, in the United Kingdom, where they have offshore regulated entities. Because of the situation with the regulation in the UK, which is tough, a lot of the institutional clients are going to offshore entities to facilitate their crypto. So when they face us, they can face us via the EU, via St. Lucia, Canada, a multitude of different regulations and jurisdictions, which is very accommodating to them.
So you would say that within your set of services, the ones that make you stand out from the others would be the large number of assets that you cover. You were mentioning 350 pairs.
Yes.
Probably the largest one out there.
I think
I'm not in a position to tell, but I'll take your word for it.
Standard is normally 50 maximum. So yeah, it's
several
substantial.
times that.
Yeah.
The customization of it you
Absolutely.
mentioned,
Yeah.
and
Pricing.
the pricing.
Yeah.
Which you say that you're disrupting the market in terms of how to price it, right?
We're just being fair to the clients. We've just come in at a price that is fair and honest, and the client base likes that price. So we've inherited lots of clients over the last 3 to 6 months because of those factors. The fact that we're regulated as well. We also have insurance via a Lloyd's of London company. So any issues regarding hacking or loss of coin, which we've never had, we're protected, or the client is protected as well. And we've also partnered with some really good companies. So Goldeye, who's actually here, they have a stand, helps us with our technical integration. And we also partner with Archax, which is a FCA regulated custodian in London. So we've got a very nice core infrastructure to attract institutional clients.
And your liquidity services are exclusively for digital currencies, right? All the cryptos.
Exclusively for institutional clients.
Crypto has been it has always been a very volatile market, but this year in particular, I think that is one of the key moments within crypto, with some currencies hitting unbelievable numbers and prices. What do you make of the current state of the cryptocurrency?
So crypto by default is volatile. I don't think that's going to change particularly anytime soon. But what we've done, and there's other players in the market, have come in and tried to negate that volatility. And how we've done that is by the way that we offer our liquidity. From a technical perspective, we've tried to minimize the volatility within the pairs that we offer. Now, the further down the curve you go away from Bitcoin, obviously it can become more volatile. So we've structured it that, yes, we offer 350 pairs, but a client doesn't have to take the 350. Actually, in most cases, they take 25 to 50 to start, to understand how the liquidity and the volatility works. And when they become more comfortable, they start going further down the curve. But I can't sit here and say that volatility is mitigated completely, because crypto is volatile. But with us and other players in the marketplace, we've tried to standardize the crypto market very much like traditional finance. So there wasn't, and there now is, good custodians. There wasn't, and there is now, highly regulated exchanges. And there wasn't, and there is now, highly regulated liquidity providers. So my advice to anyone would be, obviously, make sure if you pick any one of those, you pick one that's regulated, safe, and has a good reputation in the marketplace.
I'm assuming that you're also working with stable coins, right?
Yes.
Which one, can I pick your brain on this? I'm always very interested in seeing how other players see the industry and the trends. From your perspective, since you're aggregating liquidity from many different players, which ones do you see are either the stable coins or any digital currency that is most popular these days on an institutional level?
It's easy answer. So by far, Bitcoin, USDT, there's the top 5 ones that everyone know are the ones that pretty much, I would say, 97% of the client base go to. And that is just purely because of the volatility, the fact that they're backed by either big organizations or big balance sheets. And I would suggest to people, to certainly new entrants to the marketplace, to concentrate on those to start with. And then once you feel more comfortable, go down the curve. It's a bit like trading equities. Most people who start would trade Vodafone or Microsoft because they know the name, they understand it, they see the liquidity. And when they get more comfortable, they go down further into the AIM markets or
More exotic, yeah.
exactly. So I don't want to necessarily pick certain names because we work with all of them, but the Bitcoins, the USDTs, those are the ones that are where most of the volume is focused.
What about USDC?
Yes, most people's preference is USDT. USDC is probably third in line. Yeah.
Okay.
Those are probably the top three where I'd say 97% of our volume comes via clients.
And with the trends that you see currently within Europe, let's say, for example, with the stable coins, how do you see the market evolving?
I think it's going to take time. It's going to take regulation. So MiCA coming in is absolutely critical.
It's a game changer, yeah?
Yeah, look, if you're a traditional old school crypto guy or girl, you're probably not going to appreciate that. But whether you like it or not, and it doesn't matter what asset class, you have to have regulation. And it has to be good regulation. And MiCA is going to come in and it's going to take the crypto world to the next level. And that's good because that will give clients comfort, higher regulation. So I think until that's fully implemented, we're kind of on hold for the minute. But as soon as that comes into play, I think you'll see a really big uptake going forward.
And what is in store for Fusion Capital? H2, let's talk about only H2 for now.
So we're looking to expand into other countries, other marketplaces. We've very much concentrated UK, Dubai, Cyprus. Now we're looking at Asia. Asia is a huge market, Hong Kong, Singapore.
So you will be at the next iFX in Hong Kong later in the year, I assume.
Absolutely. Australia is a big crypto marketplace. Obviously difficult with time zones, but we're looking to push into there. We have someone in Latin America.
Massive market in Latin America.
I think I looked the other week and I think it was either number 2 or number 3 in biggest adoption globally. And with some of the issues they have with their currencies, it makes sense for people on the ground in those countries to adopt crypto. And remember, the first was, I think, El Salvador. So it's that's a huge marketplace. So it's expanding into other regions. It's adding more products. We're probably looking at ETFs, and then last options. Options obviously being more complicated. It takes a little bit more time, but ETFs is coming hopefully very soon, and that will just add to our products, which again is spot, CFDs, perps, futures.
There is no shortage of demand though on liquidity for all of these products.
No.
So which one will you hit next, you think? ETFs?
ETFs, yeah. It's the obvious one because the traditional finance world loves ETFs. And what people fail to realise, and this is really important, is if you're a hedge fund or an asset manager, in most cases your mandate by the regulator is not to trade crypto, but you are mandated to trade ETFs. Therefore, crypto ETFs fall into your mandate, which allows you to trade them.
It's a loophole.
It's just
it's a grey area.
It's a grey area, but it's a way that institutional clients can utilise crypto without breaking rules. It's there, it's black and white. So that's why when you saw some of the big ETF houses like the BlackRocks, etc., that were creating their ETFs, volume just went crazy. So that's why we want to add that next into our portfolio of products.
Great. Thank you so much, Jason.
Thank
I think
you.
it has
Pleasure
been
to meet you.
Great, very insightful conversation.
Thank you.
I wish you a very good rest of the expo and see you in the next one.
Thank you very much.